Inflation is a silent force that erodes the value of your money over time. Whether you live in a bustling metropolis or a quiet rural town, the effects of inflation are felt everywhere. Prices rise, purchasing power diminishes, and what was once affordable can slowly slip out of reach. The good news is, you don't have to let inflation dictate your financial future. By making smart investment choices, you can not only protect your wealth but also grow it, regardless of where you are in the world. First, it's important to understand what inflation really means. At its core, inflation is the general increase in prices of goods and services over time. This means that the same amount of money buys less than it did before. Central banks aim to keep inflation at a moderate rate, but economic shocks, supply chain disruptions, and policy changes can send it soaring. When inflation rises faster than your investments grow, your real wealth shrinks. That's why it's crucial to invest in assets that have a track record of outpacing inflation. One of the most reliable ways to beat inflation is to invest in equities, commonly known as stocks. Over the long term, the stock market has consistently outperformed inflation, providing investors with real returns that grow their wealth. Stocks represent ownership in companies, and as companies raise prices to keep up with inflation, their revenues and profits can increase. This, in turn, can drive up stock prices. Whether you invest in global giants or emerging market firms, equities offer a hedge against rising prices. Diversifying your stock portfolio across different sectors and regions can help smooth out the bumps and maximize your chances of beating inflation. Real estate is another powerful tool in the fight against inflation. Property values and rents tend to rise when prices go up, making real estate a natural inflation hedge. Whether you own residential, commercial, or even agricultural property, real estate can provide both income and capital appreciation. In many countries, real estate is considered a tangible asset, something you can see and touch, which adds an extra layer of security. Additionally, real estate investment trusts, or REITs, allow you to invest in a diversified portfolio of properties without the need to buy and manage buildings yourself. These trusts often pay regular dividends and can be traded on major stock exchanges, providing liquidity and flexibility. Commodities are another asset class that can shine during inflationary periods. Commodities include things like gold, oil, natural gas, and agricultural products. As the prices of goods and services rise, so too do the prices of the raw materials that go into them. Gold, in particular, has long been seen as a store of value and a safe haven during times of economic uncertainty. While commodities can be volatile, adding a small allocation to your portfolio can help protect against inflation's bite. For those who prefer a more conservative approach, inflation-linked bonds offer a unique solution. These are government or corporate bonds specifically designed to keep pace with inflation. The principal and interest payments are adjusted based on inflation rates, ensuring that your returns don't lose value over time. In the United States, Treasury inflation-protected securities, or TIPS, are a popular choice. Other countries offer similar instruments, such as inflation-linked gilts in the United Kingdom or inflation-indexed bonds in many emerging markets. These bonds can provide stability and peace of mind, especially for those approaching retirement or seeking a safe haven for their savings. Another often overlooked avenue is investing in businesses or sectors that have pricing power. Companies that can pass increased costs onto their customers without losing sales tend to perform well during inflationary periods. These might include utility companies, consumer staples, or technology firms with unique products. By identifying and investing in businesses with strong brands and loyal customer bases, you position yourself to benefit from rising prices rather than be harmed by them. Diversification remains a key principle in any inflation-beating strategy. Spreading your investments across different asset classes, industries, and geographic regions reduces risk and increases your chances of success. For example, while stocks may do well in one country, they could underperform in another. By holding a mix of assets from around the world, you create a resilient portfolio that can weather various economic storms. It's also wise to consider alternative investments. These can include private equity, venture capital, art, collectibles, and even cryptocurrencies. While these assets often come with higher risk and less liquidity, they can offer outsized returns and unique inflation hedging properties. For instance, Bitcoin and other cryptocurrencies are seen by some as digital gold, with a limited supply that makes them attractive in times of currency debasement. However, it's important to approach these alternatives with caution, conducting thorough research and only allocating a small portion of your portfolio. No matter where you live, access to global markets has never been easier. Online brokerages and investment platforms allow you to buy stocks, bonds, real estate, and commodities from virtually anywhere. This global reach means you can take advantage of opportunities in countries with strong economic growth, favorable demographics, or abundant natural resources. By looking beyond your local market, you open the door to new ways to beat inflation. Education is also a powerful investment. By continually improving your skills and knowledge, you increase your earning potential and adaptability. In a world where inflation can erode the value of static incomes, those who can command higher wages or pivot to new industries are better equipped to thrive. Consider investing in courses, certifications, or even starting your own business. The returns on self-investment can be both financial and deeply fulfilling. Finally, remember that beating inflation is not about chasing the highest returns or timing the market. It's about building a diversified, resilient portfolio that grows steadily over time. Regularly review your investments, rebalance your holdings, and stay informed about global economic trends. By taking a proactive approach and making informed decisions, you can protect and grow your wealth, no matter what inflation throws your way. In summary, beating inflation requires a thoughtful mix of equities, real estate, commodities, inflation-linked bonds, and alternative investments. Diversification, global perspective, and ongoing education are your allies. With the right strategy, you can ensure that your money not only keeps up with inflation, but works harder for you, anywhere in the world.